Good morning, ladies and gentlemen. It's Alan Barry Labucan here. I'm the chief market commentator for Agoracom. We're talking markets again here today, and I've got a couple great guests. A new guest that's been coming on fairly regularly is Pat Boland. I don't think if you've been watching Canadian business media that Pat really needs much of an introduction. So I've been sort of talking about your laurels for a while there, Pat. I'll just give a little more modest of an intro today. How you doing, Pat?
Sounds good. I'm good. Good to see you again, Al.
You bet. And then our other guest is Tommy Humphries. Tommy Humphries is the founder of CEO.ca. And they do a great job covering small cap companies, so we're great to have Tommy Humphries on the show as well.
Thanks. It's great to be with you guys.
So one of the things I wanted to talk about today is why don't you give us a little rundown on what CEO.ca is for the audience there, Tommy?
Yeah, well, thank you. Our website, CEO.ca, was started about 3 years ago, and a couple of friends of mine owned the domain CEO.ca, and I had the opportune moment where they needed some cash, and I bought it off them for a song and started blogging about the resource sector mostly, and because the market was so tough, we were able to get pretty good access to interview CEOs and start getting some context on the sector. So for over 3 years, we've been blogging every day about discovery stocks and about promoters, and it's a combination of a free website, a newsletter, and a little chat service and a conference. So it's a little media business within the natural resources sector, and we're I guess talking our book and investing in companies and writing about that process, and just kind of in the process of building a little media gig within the space. So encourage everybody to check it out, especially you guys.
Hey, Tommy, does it deal only with mining stocks, or do you go into other small caps?
Well, we definitely cover the energy space, to a lesser extent the tech space, because I mean I'm primarily a technology person, a internet boy myself, and that's my skill set. But I just find I find that the most exciting small cap opportunities in technology are private, and the public venture space is just very well suited to natural resources, and so it's primarily junior mining, but we certainly aren't tuning out any other opportunities or stories and stuff like that. So,
Tommy, do you think that I've been sort of seeing a trend that I'm interested in, which is I think that the tech startup space is very similar to the kind of investors and the ecosystem, if you will, as it is for mining-related companies. And I just haven't seen that transpire as much as I think it will in the future. What's your thoughts on that?
well, I think it's true. Like biotech or technology or exploration is all research and development, right? So you need a investor with expectation. They're going to take multiple shots and have some diversification. Some of the stories are going to fail, and so I think the angel investors are suited, high risk tolerant investors that are suited to the same tech R&D moonshot is probably going to be interested in a drill hole play, but I don't think they have a very good understanding of it. And one of the big problems that's so obvious is Uber is a 3 or 4 year old business, and everybody knows it's worth $42 billion. But there are no junior mining stories right now that are having a finite return like that scalable. So I mean, Probe Mine sold for $450 million, or maybe it was just over 500. So it's a great win. But the best success in the mining space has been so much smaller than the best success in the tech space. So I think the investor base is just not quite as captivated right now, at least with resources. But as you know, like the cycles kind of reverse, and there'll be there'll be the Slack, which is a $2 billion tech startup that's a year old. There'll be a Slack for mining in a couple of years when the cycles turn, that has a big market cap overnight. But right now, the investors aren't seeing it. What do you think about that?
Oh, it's interesting you bring that up, because I think the difference between tech is scalability. And the mining sector can't do the same scalability. You got to mine unless you do a Barrick all over again and you become a consolidator, or Silver Wheaton, I guess, back in the late 1990s. That kind of leverage doesn't come into play in the mining sector, and so you're restricted by whatever it is that you've got in the ground. That can grow, but it doesn't grow at an infinite pace the same way the tech sector does. And I think that's the key difference. That's why they're paying higher multiples.
Yeah. Well, what I was getting at more, Pat, is that in Vancouver, there's an infrastructure of brokers, analysts, investors. It's sort of the center of venture capital for the resource space. And what I'm getting at is that there's so many similarities between that and what the venture capital tech space needs. And I just think it's a natural fit.
Oh, absolutely, I agree. If that's your point, yeah, I totally agree.
Well,
Yeah.
but they've got to figure it out because the founders in the tech space are raising money privately. They're not dealing with regulatory burden of being public. The aftermarket for the private shares in these tech startups is super healthy right now. So there's, the mining space, struggling in the public venture sector. It just isn't nearly as appealing, and the dollars that are flying around Silicon Valley are just staggering. But good. I'm glad because they're making pretty awesome products, and but the mining space it's not, I don't know, it's not as easy as making a crowdfunding app for the mineral space. The companies need tens, if not hundreds of millions of dollars, and it is a space for specialized investors, but it's just been too long. It's been 20 years since Diamond Fields, right? That was the last stock to go to $200. So I think investors in the resource sector will be tickled by some discoveries, and that will get the process moving again. But
oh yeah, we always have a cycle. Pat and I have seen a bunch of them.
Yeah, well, maybe the big discovery is going to come at the Lac Pow project, your new deal, Alan. That looked really interesting.
Well, I really appreciate you mentioning that. Yes, Great Bear, Pat. I don't know if I've mentioned it to you, but just the last week I joined as a special advisor, and we were able to do a deal with those Sisqo royalties to get one of their exploration projects and bring it into Great Bear Resources. And Tommy's had an interview not long ago with Andre Goumand, who is the guy who runs Virginia Gold Mines, and they recently merged with those Sisqo royalties, and now they're becoming a royalty powerhouse. And Andre is an exceptional explorer, and we were able to do a deal with them to get a 50% interest in their Lac Pow project, and it's got that potential that could catch a lot of people's attention. But Tommy, I think it gets to a point that some of the structural problems that are in the industry, for what you mentioned earlier about stocks going from $1 to $200 like a Diamond Fields Resources, and we've talked about this on your CEO chat, and the structural problem, Pat, is that now these companies have 200-300 million shares out, and the reason that they have so much shares out is because things are so much more expensive than they were back in the 90s, that these companies have to put out so much stock in order to do their work. And so that's a bit of a hindrance to those big moves that you've seen them as well, Pat, over the years.
Fair enough, Alan, but that goes back to Euro-Nevada. And for years, I mean, it was one of the earliest, if not the earliest, royalty company, and the model nobody understood. And so for years, they never put a multiple on the model. I mean, extremely successful corporation overall, and yet nobody recognized it for a long time. And I'm wondering, where is that valuation spectrum right now on the royalty model?
Well, you're looking at a company like Sisqo Royalties that is an aggressive company. They've got see what made Euro-Nevada and Franco-Nevada such big successes back in the 90s, Pat, was that that royalty model makes a lot of sense.
Yeah,
and they were the first real ones that were the big winners. So but we're now seeing. It's funny that back in the 90s when gold was so cheap, Pat, one of the big successes was the royalty companies. We're starting to see those royalty companies make a lot of noise, and Sisqo Royalties is extremely exciting because they've got the royalty on the two big mines in Quebec. The Malartic mine that was developed by Sisqo Mines. Sisqo Royalty was spun out and has the royalty on it. And then Eleanor, which is the big mine that Gold Corp is developing, they bought that from the predecessor to Virginia Gold Mines, which now has merged with those Sisqo Royalties. So it's funny, Pat, that we saw a real bottom in the 90s with the price of gold, and some of the ones that were doing well then were the royalty companies. I'm seeing a similar thing, and I don't think that that's a coincidence.
Yeah, my opinion on Sisqo is that it has obviously tremendous portfolio. From valuation standpoint, it's not like super exciting to pay that price for it, but clearly they have a potential to scale it up, and they have the best management possible. That's what the royalty space is. Like yesterday, you saw Sandstorm Gold paid $56 million for a royalty on the Diavik diamond mine, and the mine has cash flows about $7 million a year. So the royalty companies are paying a good chunk of change to buy these royalties. They're not buying them cheap. $56 million capital outlay for $7 million in annual income isn't as exciting an investment that I want to see as a junior resource speculator. But the thing that's exciting is that the royalty players, they trade obviously at premiums, and they can make these accretive acquisitions. Like within a junior mining company, there's no multiple on a royalty. There's these single asset junior miners or junior producers, they get no love in the market for diversification. So when the royalty companies can come in, they can pay 1 or 2 times for their royalty stream and have it re-rated to the fantastic multiple that the royalty player has, and just immediately realize value in the financial sense. But Sandstorm's being really aggressive too, and they've made some mistakes out of the gate. But I think they'll, over the long term, a young team with the platform and cash will probably be able to do something good with it. But Franco-Nevada, as everybody should know, was a benefit of exceptional luck in the Gold Strike discovery, and that's sometimes what you need in the mining business is a stroke of luck, right? So.
In any business, Tommy.
Sure.
That gets into something we wanted to talk about, which are some bright spots out there in the market. In spite of a very challenging space for the resource, small cap resource type stocks, there are some bright spots out there. I thought we'd talk a little bit about one of those. Do you have any bright spots that you're looking at these days, Tommy, that you wanted to talk about?
Well, yeah, I mean, I have no choice. I have to be optimistic about it. But, bright spots is kind of, the problem with bright spots is it's kind of backward looking, right? And you don't want to chase yesterday's winners too much. But the one I want to mention first, and I didn't say this in the email to you, but in fall 2013, we saw a piddly little junior company that was like a 9-cent stock. It had appointed a CEO, U.S.-based former CEO of Molly Corp had joined this tiny little junior. And we put out a tweet that day that said, because Molly Corp had since gone from $0 to $70 and back down to 50 cents. And I had commented on Twitter, is this Wall Street's trash, House Street's treasure, ? And it compelled the CEO to reach out to us, and we wrote about him a little bit over the fall, did a video interview with him in December, and actually bought some of his shares. And it was a 15-cent story. It was called Corp Developments at the time, and that's the brightest thing in the market right now. It hit $1.90 2 weeks ago, because
what do they do, Tommy?
Corp is it's a niobium and scandium development asset in Nebraska, but it's a sort of the strategic metal play. Niobium makes steel harder and stronger. But they just, this was a situation of one of these overlooked, dreaded, hated juniors that had a CEO come in with some credibility, and he had a few other of the boxes. You know, he had his own money. He bought $4 million or more worth of stock in the placement. But he just had this optimism, and he had a new shareholder base because he's a Colorado-based guy, or I think maybe California. But he promoted the stock, told the story around the world, and because he wasn't marketing it in Vancouver and Toronto, there was a market for his message, and the stock's up 10 times. So I think that shows us that, you know, that some of these tired old fucked up juniors are going to have a good run, and it's just when the market for the message comes. So
well, it's interesting you bring up strategic metals. I was just reading last week that rare minerals, same kind of thing, are getting locked into China. They need so much of that for their infrastructure build out and iron and those kinds of things, that the rare minerals are not being allowed into the world marketplace, and there's going to be even more exploration happening in strategic and rare minerals around the globe. That's a perfect opportunity.
yeah, it's definitely a promote. I mean, it sounds like it'll sell, right? But economics of this, as the 60 Minutes profile on Sunday pointed out, that over 90% of the world's rare earth supply comes from China. They had a little bit of a naval dispute in 2010 with a Japanese group, and they cut off the rare earth supply to Japan for 40 days. And I think that the world is at risk of having China play cards with its rare earth supply, and certainly some assets outside of China need to be developed. But you know, it's the economics just aren't there to build. Like Corp, it's the only U.S.-based rare earth producer, can't make money, is broke, is literally on the verge of default. So, you know, there's a scarcity and there's a need for supply on one hand, but the commodity prices are just not there, which, you know, I guess at some point it sorts itself out. But I look at also South Africa. I think platinum is, in a sense, is a strategic metal. And some of these South African platinum mines cost over double what they can sell platinum for to produce. And these assets can't make money hidden spots selling platinum to spot market. But Chinese groups just bought these so out of the money platinum assets from Eastern Platinum. So there's a market for these assets on a strategic sense, and the market itself, the spot market, is not in line with it. So anyway, we need higher commodity prices to build new mines.
Well, I think part of the reason we haven't had higher commodity prices is the unrelenting move in the U.S. dollar that over the last 6 to 8 months has gone from the dollar index was trading, I think, in May at around 78 points. It's now getting up to 100. Now that's against a basket of currencies, so practically every currency in the world other than the U.S. dollar has been going down, which puts a lot of pressure on the tight prices of commodities. To me, I'm starting to see the signs that maybe that unrelenting bull in the U.S. dollar is ready to start relenting. One of the biggest keys to me is that now the corporate America is starting to feel the pain of, you know, especially the multinational industrial companies that do business outside of the U.S. are having to report that money made in other countries back in U.S. dollars, and they're starting to see pressure on their earnings. And I think that'll put pressure on the you know, those that make the decisions. And I think we're going to start to see some pressure on the U.S. dollar, which should be good for the price of several commodities.
So an excellent point though there. Oh, sorry. Go ahead, Tony.
No, I was just going to say. So I guess you're presuming there'll be no rate increases.
I think that if there is a rate increase, it will be symbolic. I don't think that the Fed. I've been pounding on the desk for a few years now saying that I don't think they can raise interest rates, and my latest mantra is there's $18 trillion reasons why. They've got $18.1 trillion in debt. You start raising interest rates a point or two on $1 trillion or 18 trillion, and it adds up real quick. So I don't think that they can move interest rates very significantly.
Yeah, and truth be told, they're the currency of last resort, and they can do it for a little while, but not for a lot. I want to get back to your point about earnings growth, though, because I just saw a report from Standard & Poor's indicating that you could have sub 1% earnings growth in 2015. Anytime that happens, it can be a precursor to a recession. If it slips into negative, it's almost 100%. and right now we're looking at 0.8. Now, granted, a good portion of that S&P slip is because of the energy stocks. They're going to be down in the order of 50+%, but still, your point is really well made. Earnings are a little wobbly as far as growth is concerned in the United States, and people aren't going to pay up for that.
And they are, but they are right now, Pat, relative to the price-earnings ratio. The market is at the second highest premium that I've seen in my career. During the late 90s, we saw the most out of touch with reality valuations. Well, we're pretty up there right now, especially when you consider that kind of single-digit earnings growth relative to 17, 18 times earnings PE. That's pretty rich to me in a slowing earnings scenario.
Oh, and if the earnings go negative, it's a sign for recession. But I want to go back to something else that was being pointed out, because I did go to CEO.ca and check out, Tommy, your columns there. And your most recent blog was about NextGen Energy, a uranium company in Athabasca. You talked, though, earlier about commodity prices improving. Is uranium a play in the near future, do you think? And is NextGen one of the ways you can do that?
Well, thank you. I guess the two-part question. The uranium spot market right now doesn't support the construction of any new mines, and producers are having a very tough time with economics of the uranium business currently. So for new production to come online, I think the price is going to have to move from low 40s or high 30s to high 60s. And I think everybody's been saying that for a long time. People were definitely early and missed a rising uranium price market that just didn't come, partly to do with cheap gas as made it so the Japanese haven't had to switch on their reactors yet. There's some oversupply issues, and just nobody really cares, frankly. But there's two parts of the uranium business that are almost price agnostic, and one is the Athabasca Basin in Saskatchewan, which is equivalent of it's the Saudi Arabia of uranium, as Rick Rule says, and that's because in the Athabasca Basin in northern Saskatchewan, the uranium deposits are exceptionally concentrated. They're very rich. Where
just 10 to put that into context, Pat, everywhere else in the world, you're looking at sub 1% uranium. In Athabasca, you're talking about 3% plus, sometimes going up to 10, 15, 20% uranium percent per ton. That's the context.
Regardless of commodity price, even at a low uranium price, the high grade drill intersections that are found in the Athabasca Basin, like amongst Fission has and NextGen has, Hathor used to have, certainly Denison Mines has, and I mean this rock. I don't want to start spouting numbers that are inaccurate, but this rock is it's the most exceptional value per ton of rock in the mining space because the grades are so rich. So NextGen's or Athabasca Basin is a strategic uranium region, and NextGen is it's the second most valuable of the juniors. I don't consider Denison a junior. Fission is the leader. They've made a spectacular discovery at Patterson Lake South with over 100 million pounds measured, indicated, and inferred so far. Right next door is NextGen at the Arrow discovery, and they've moved very quickly to explore their land package. They made a discovery at the beginning of 2014. It's grown in size by fourfold already. So it's right next to Fission, and it's that district in the southwest side of the Athabasca Basin. It's really becoming something. NextGen had drill results yesterday.
What makes that such an exciting area, Pat, is that throughout the Athabasca Basin, visualize if you're in your tub, right? And the bottom of the basin is your tub, the bottom of your tub. And that is the general place where you've had to go and find these super high-grade discoveries, the ones that the Cameco's and the Arevas of the world own, okay? What makes the Hathor and the Fission and this NextGen much more exciting is they're kind of finding on the sides of the tub, actually at the top of the tub, they're finding this super high grade that's right close to surface. That's what makes these projects so special. Hathor, in a bad market, was bought out for around $500 million. I don't think it's very long before Fission will be bought out as well. They're another one with this super high grade right at surface. You can open pit this high grade in some places on the Fission ground. I think that they're going to be a buyout, and this next gen is a very interesting new discovery that is also high grade and close to surface.
Yeah, and I think the thing about next gen is just it's come together really quickly. It's growing really fast and it's big already. And so Fission's worth 500 million or something market cap, and next gen's about 70. So it's not as defined or as advanced or as big and rich as Fission's property, but they've proven how much value creation can be there. And there's 4 rigs turning at the next gen Zero property, and some exciting targets that are part of the current program. So that's a bright spot. There's going to be a lot of news flow. Dundee and Haywood both do a really good job covering the story, and I think it's fairly well understood, but definitely one to watch and follow. And they're taking a shot at some targets about 500 meters northeast of where they have made their core discovery. And I think if they can hit there, obviously it would really open up that project, and the stock would probably get a shot in the arm. But obviously, like all juniors, it's a risky play. So.
Yeah, but the shot in the arm could be just in uranium prices. I saw a report the other day that China, in the next 5 to 7 years, is going to need 15 gigawatts of power, and they're doing it through nuclear. So that's going to create as far as I understand it, uranium shortfall, and that there's going to be a real demand, and you could get to your high $60 range fairly quickly.
Yeah, no, it could happen in a few weeks.
When it comes to the actual production of uranium, there already is a shortfall. We use about 175 million pounds throughout the world on an annual basis, but only about 110 is produced. And where that gap has been sort of filled is the decommissioning of nuclear weapons. Well, one day that source is going to get tighter, and then so your physical production of gold or of uranium and the demand for it is going to start to drive that price much higher, because it is very difficult to find uranium mines. They're not cheap to build, they're not cheap to find, and we're just not finding them fast enough to make up for the demand for it on a physical production basis. On that note, Tommy, I wanted to get back to CEO.ca a little bit, and you've got a couple really exciting things going on there that I wanted to talk about. One is not too long ago, you were just before the PDAC conference, about 10 days ago or so, you had a conference just before it. Wanted to hear a little bit about that conference. Any sentiment from it? How did it go for you?
Well, thanks for asking. We had a conference with 400 people in Toronto on, I think, February 28th, which was the day before the PDAC began. We had 15 junior mining and energy CEOs presenting, ranging market caps from 10 million to low billions. And the turnout was really strong. It was brokers, fund managers, retail who've been in the space for a long time, and I think people, like, it's overused as cliche, but people are cautiously optimistic for the space. And one thing that sucks is that there weren't much new faces. But the quality of the companies we had at the show was really what made it special. And I host a conference with Keith Schaefer of Oil and Gas Investments Bulletin and Eric Coffin of Hard Rock Advisory, and they're both very experienced analysts and make it easy for me to be part of a good show. But what I'm really looking forward to is we're going to bring our show back to Vancouver in October and try to do it again here. And Alan, we'd love to have you. Pat, I think it might be a bit far for you to drive out, but you're more than welcome.
Definitely, I'll be there for sure, Tommy.
Yeah, conference
to speak. I love getting up in front of an audience and telling stories.
Well, you're born to do it. So.
Thanks. So there's another thing you're doing at CEO.ca that's really exciting, and Pat, I think you'll appreciate this. Is how how Pat and I came to know each other was way back in the 1990s. Pat had a show called Investors Online.
You remember that? Good for you.
It was I love the show, Pat. Every Saturday it was on, I think at around 11 o'clock out here. And Pat would have some great guests. And it was a really good group of guests, too. It went from Andrew Pyle and sort of the banking sector analysts all the way down to the smaller guys and big companies, small companies. It was a great show. And one of the things I loved the most about that show, Pat, was after the show was on, you had a chat site for the guests and the viewers. And there was always a robust chat in that after the show. And now Tommy has on his CEO.ca, he's started a chat room called chat.ceo.ca. And it's the same kind of thing, Pat. Lots of industry type people in there, regular investors, just having a water cooler kind of conversation about what's going on in the space. I love it.
Thanks,
so, Tommy, my question is this: how do you drive people into that chat? How are you attracting people?
Well, that's the marketing challenge. So we're 3 or 4 months into this development project, and the long story short is I met a teacher at a local web development boot camp who's just this brilliant guy, and he decided to take my project on, which is I had a vision to make a Canadian investment conference in your pocket. And luckily, he was the right guy to tell me what I should and should not do, and I trusted that he was. Most of these web development people love to find out your budget and work around it. But this was just a super smart guy who's put together a little team, and so we're through user experimentation and modern technology trying to build the most useful investor forum and chat room tool we can. So it's early. We launched it probably the first week of January, and so far we've been just dropping hints within our CEO.ca posts like, hey, come and chat with us and check it out. And I think the feedback's been pretty good. We do have a healthy 100+ people who are on it every day, and there's certainly more than that in the user numbers. But how are we going to get the word out is something that's it's dawning on me that obviously we need to tell the story, and that means that I need to be positioning our chat as efficiently as I can and talking to people about it. But the truth is we're just, and my developer who I was mentioning, he says the way to market it is called FOMO, fear of missing out. He says make it so good and useful that everybody has to join. And so we're just trying to make the tool beyond just a chat room. But I'm an SMS freak. I love text. I love it's so fast I can see the data. I loved to chat when I was younger on the message boards, and I as a creator of content can publish equivalent of 10 blog posts in chat in an hour, where it would take me I could do one blog post on it. It's just instant. It's copy paste. And so I'm sharing faster, and my hope is that that discoveries and emerging exciting shares and stocks in Canada will be discussed in the chat in real time and first. So we hope to you get the word out through quality and.
Pat.
Hard though.
A perfect example is that when Great Bear made the announcement that I had joined the team and that we had done the deal, one of the first spots that I went and started chatting about it was in chat.ceo.ca. I know that there's a lot of brokers and analysts in there and lots of geologists and smart, sharp guys, and I got asked a bunch of really good questions, and it's so much different than the old days of how to get stuff out there.
Well, how to promote is definitely changing. What I'm really excited about is something we're pushing new features on it on almost every couple of days, and we've been working for a while on an iPhone app, which I have, but we're just waiting to get it into the App Store, which just makes the experience on your phone, and especially on these big devices, like this thing is so awesome. Anyway, it was born. These web tools like chat.ceo.ca were made for these big phones. But we're pushing private chat rooms in the next few days, which I think is going to be interesting because It's just another forum to have instant conversations with for invite-only rooms. And we're also doing tests that when you follow a specific company in the chat, we're working on a product that pings the chat every time an insider trade takes place. So the chat rooms are going to have data from insider filings. They're going to have social context from people like Alan and myself, and brokers and promoters and geologists and hypesters and shorters. So I'm hoping that people can go and find and follow their favorite companies and get useful information on it. And really the trick is we're building it around user feedback and with the best mobile tech. And I hope that over the next 6 or 9 months that we can just keep iterating and that people will recognize it. But it's definitely on me to pursue every opportunity to tell the story. I feel like a mining promoter now. I've got to start knocking on every door I can.
Well, he's building an audience sort of organically, Pat, and I did the same thing with my newsletter back in the day by email, and you just have to sort of build it one user at a time, and so we got to put you in a headlock and get Pat Boland on there as well.
Well, that's what will get really exciting. I mean, Pat, what are you going to do next for business media in Canada? Where are you seeing? I mean, this is interesting to me.
Well, your point is well made in terms of the landscape changing a lot through technology from what we did 15, 20 years ago with investors online. But there are still the hallmarks of delivery, and you look at the main channels like the Business News Network, they haven't moved into what I would consider social media.
Yeah, two-way.
I think that the opportunity will come in expanding that space, and I'm just trying to quantify how you do that.
Well, please check out our thing. I think I know it's not. I'm biased because I'm the one paying for it and I own this service. But to me, I think that chat and two-way communication, where it's like the talent and the host and the audience together, I think that's the new radio. Reading text on your phone, on your computer, I think it's better than television because you can come back and return and see all the text and scan it. Anyway, I'm excited about chat.
Well, and you're not paying me, Tommy, and I'm on there all the time.
Yeah, well, that's what makes it good. Is the reason why it's going to work is because smart people are talking about companies there, and that's what's going to get users interested in the service. So we're working on it. It's a work in progress, but I really appreciate being able to talk to you guys about it, and
sure.
I really want to tell the world chat.ceo.ca. I got to get it tattooed on my forehead here. Anyway.
Good luck with it, Tommy.
Thanks, man.
We got to get you in there, Pat.
Please, yeah.
Looking forward to it.
We'll roll out the red carpet for you, Pat. Anyway.
Well, on that note, guys, I think it's a perfect end point for the show. I love creating content. I'm always out there trying to spread the word. I really enjoy what Tommy is doing at CEO.ca. With his chat site. My handle on there is my Twitter handle at Alan B Reports, so you can see me on there fairly often. And chat.ceo.ca I think is a great one for everybody to check out, including our friend Pat there.
Looking forward to it, Tommy. I'll take a closer look.
Thank you guys for having me on for this little breakfast hour with you. I appreciate the opportunity.
Well, we'll definitely have to do it again, guys?
Anytime.
Perfect.
Awesome. On that note, everybody have a great day. And again, the show is for information purposes only. It's important before you make any investment decisions to do your homework and speak with your financial advisors. On that note, again, have a great day, and we will talk to you soon.